It will be heavy on yen crosses today, and I want to start the webinar looking at dollar yen, just to point out where we are. Longer term charts, obviously the daily and the weeklies, you can all find on the long-term charts section of the page or the website. I've done something to make, I think, it a little more clear as far as bias and all that stuff is concerned. And there's charts with blue lines indicate supports that are ideal to buy and stuff, and charts with red lines indicate resistance, ideal to sell. So that should be a little easier than trying to put the boxes in and everything. But dollar yen, we got blue lines on the chart, right? It's been a bull trend. But we did run into a big level here yesterday, and trading at it right now, and that's the you got two parallels here. Okay, you got the upper parallel from this structure, all right, which we never reached the lower parallel, which is actually somewhat bullish, because it means that the trend is strong. We also have the upper parallel. If you were to just draw a line across these lows and extend it from this high, you get up here too. And then of course we had a doji, which was also a J spike yesterday, after the market took out the December high. Okay, so there is a lot of resistance up here. But again, notice notice that these are not, there's no, I don't see a short play here in dollar yen necessarily yet, okay? A short here would very much be a flyer. In other words, it would be, kind of a punt against the high, if you will. But I do like being long yen, just not necessarily against the dollar, and that's the reason why the last few days have actually concentrated on the swing updates on the on some of the yen cross setups, right? So this is a way to, even if you don't necessarily have a trade here in dollar yen, it kind of puts you on notice to look at other yen crosses. And indeed, we've done that, and we actually got into a really good pound yen position right now. Kiwi yen would hit a perfect level this morning. We'll look at that stuff in a second. But you say, what would make me turn bearish for a trade on dollar yen? Let's go to the shorter term chart. Hourly, this is the one that you've all grown accustomed to, I'm sure. And we've got a few things here. The biggest thing for a trade is you want to see the market break some support first, okay, before you go short. You want to see it break some support, and then you want to see it retest that support and hold as resistance, okay? Dollar yen obviously hasn't done that yet. In fact, we really haven't tested support. I mean, last night's low, 2084, was 2 pips above the week open. Really support is more like 120. Well, at this point, it'd be a little higher. 120.75, 120.60. These upward sloping lines, so the support does go up a bit each day. But hey, there are some signs here that are encouraging on the downside. For one, if you look at this decline from the top, you've got, a 5-wave drop, okay, 4 or 5. You can see that 1, 2, 3, 4, 5. And so far, we've got a very clean 3-wave rally, okay? The market started selling off this morning at 10 o'clock, and the dollar yen has gone drifting to the upside, kind of doing a whole lot of nothing right now. So, in order to get this thing active on the short side, again, you want to see a break below this region. It probably means a break below 120.50, and then potentially, making 120.80 as resistance at that point, okay? That's what I would look at, for a possible opportunity in the dollar yen on the short side. We'll look at a longer term chart real quick, just so you're aware of what's up here in the longer term. Much longer term, I should say. this goes back a couple decades. You can see that we've got, for one, we've got this upper parallel here, but that doesn't mean a whole lot. You've got the confluence of the 1990 to 1998 line and the 1995-2005 line at, it's shy of 124.13, which is the 2007 high. It's a little above 123, 123.10 or so. That line actually isn't until mid-April, right? That's important because when we look at the seasonals for dollar yen, you can see the seasonal across every time frame tends to peak the week of very beginning of April. Okay, so while we're short some yen crosses now, or at least pound yen officially, I would not be surprised at all to see, you know, dollar yen come into support, potentially hold down here, and then go higher yet again. Okay, in fact, it's probably a favored view. You got an A, B wave here, C, okay, and then, you know, look higher yet again. You know, at that 120, you know, at this point, 60 to 75 support on dollar yen. So there we are with dollar yen. Look at some of the other yen crosses now, of course. So Aussie yen, you know, the rally off the lows in February was just choppy and just absolutely pathetic, and we started to get some nice bearish slope once we were here. Okay, once we were at, you know, really on Monday, and we were rejected at this level, the sliding parallel here really puts you on notice that something's up and that conditions have really changed. Okay, and again, notice the anatomy of this trade setup, if you will. You know, first you break support, okay? Didn't necessarily retest that same level as resistance, but it did indeed test, you know, what at that point was a very new bearish slope as resistance, and it did end up holding. And of course, break down, you know, consolidation around the median line and another sliding parallel, and then that exact same sliding parallel, same chart you had last night, is exact resistance this morning. Okay, last night and this morning. And last night here at about 11 o'clock at night, and this morning at 9 a.m. So Aussie yen, you know, I'd still be looking at this as resistance. Okay, I understand there's, I think, employment tonight in Australia, so you know, if there is a big surprise move to the upside, then, you know, maybe this line comes in again as resistance, and if that happens, that would be a great opportunity to get short on Aussie yen. As you know, the reward to risk at that point would be really, really solid. And 93.18 would be of particular interest for a couple reasons. One, it's daily reversal resistance. 93.10 is the week open, so that whole region. But with employment tonight, you can see this line comes up a little higher. Actually, what I'd like to do here is draw a fib. I want to see where 93.27 is a 61.8. That could be an interesting level if we get up in there at some point. The exact intersection would be tomorrow during European hours, but something to think about, or put, you know, at least label it so you're ready for it if it happens, right? So that would be Aussie yen. And look, it's possible that we've got a 5-wave drop, right? 1, 2, 3, 4, 5. Okay. Again, bigger support, lower parallel, 91.60 is right here, but you know, respect the possibility for a rebound in second wave. Pound yen, go to the short-term hourly chart. Okay, so last night I'd flagged 83.10 as a resistance point in pound yen. We'd flagged resistance up here at 83.96 on 2 days ago. Had an order there. Unfortunately, it was not triggered because the high was 83.91. So we missed that entry by a few pips. But in any case, we're able to get in this morning as it had tested this line and then came off slightly. So, you know, the high here, 83.13. You know, we'll move the stop. We're testing the median line here now. Ideally, we just consolidate around here. I don't want to see it necessarily above 182.20. You can see this line here, right? Can make that a little. That actually might be the new resistance line. Okay. This could be new resistance. Downward sloping. Support here, kind of sloppy, okay, but it was support, you know, also last night during Asia. So maybe it's resistance tonight during Asia. Something, you know, to keep in mind here. And 82.20 basically intersects with that line here. So I'll probably be putting the stop just a little bit above here. You know, I'm in at 82.75, but, you know, again, if this thing is in, you know, a third wave lower, which is certainly possible, okay, 1, 2, or A, B, either way, a third wave or a C wave lower towards the lower parallel near 78.30, 78.50 or so, if that is what's going on, then pound yen really shouldn't be trading much above, I don't think, 82.20, okay? So that's, you know, how I'll look at that. Obviously, I mentioned this on Twitter, but if we break down here, right, this thing breaks down and then comes back and tests the median line, which is the black line, as support or as resistance, right? It has been support. You can see it's been support the last few days. If we break that, it'd be obviously quite a big deal, and a return to it from the from below would actually put you on notice that you might want to increase your trade size on that with a tight stop in order to take it lower still. So that's, you know, what we got with pound yen. So pound yen, again, review 82.20 resistance, I think. Shouldn't trade much above there if we're heading lower. And 78.30, 50 area targeting, you know, if not this week, then also the next week. Fernando says, would 170.30 also be the head and shoulders target? Bingo, my friend. You've got it. That is correct. So head and shoulders, if we did the measuring, right? Measure like this. Oops, what we got here? Okay. So depending on where you measured from, if you measured from here, it'd be 178 even, okay? If you measured from here, it would be 178.31, and the daily reversal level is 78.28. So yeah, spot on. Okay. Either way, that 178.30 area looks awfully important. So I would, you know, expect a bounce from there, even if the much larger trend is actually down. Speaking of that, why don't we take a quick peek at pound yen. So here's a weekly chart, pound yen. A few things. All right, so you can see the channel that goes off the 2012 lows. There's a couple of very interesting observations here. See how the upward channel here, even if we see if I extend it from here, it doesn't do it either. So yeah, you can see how the upward channel lines, these are lines that are just parallel to these lows, okay? You know, arguably how important this is, you know, I don't know, but it's just a concept worth understanding or knowing or whatever. See how the high that we made in December, actually, we did not actually make it to the channel resistance, okay? That's, you know, if you think about an oscillator, like RSI or momentum or whatever, okay, that actually is, think about divergence, right? Where you have, you know, price divergence with the oscillator, where the oscillator is very subdued and, you know, price is at a new high. This is actually the same kind of concept, okay? When you have a, you know, an oscillator, when you have a price peak before it reaches channel resistance and turns over, that's telling you that the market's especially weak at that point. The momentum has not, you know, is not strong enough, and this trend's really petering out, okay? And, you know, what this tells you is that, you know, once you get down to support, to the lower channel, where most of the time you'd be expecting the channel to hold, right? Once you get down to support, the implications are that the channel will not hold, okay, and that you're actually going to break through it to the downside, all right? So, you know, obviously the trend here is awfully mature. We've been going on since 2011, right? So, you know, we're in year 4 of an uptrend in pound yen, which, you know, I'd argue is a pretty mature trend, right? 4 years. So, you know, keep that in mind as we move lower in pound yen, that, you know, upon visiting this channel support, you know, once we break, we should be almost expecting it to break because we weren't able to get all the way up to channel resistance. So, you know, it could be that there's a much larger trade on the horizon as well with respect to pound yen, okay? And so on that, why don't we look at pound dollar, because we have big developments today. So as you know, I wrote that special video report, I think it was about a month ago. It was in early February about how pound dollar is eventually at risk of trading all the way down into 143.50. Well, after trading up to 145 or 155.50, it appears that we're on our way, you know, to 143.50. In fact, we're cracking this support here now. There's a possible support just below here, but again, the, you know, under median line logic, if you will, you know, the break below the median line, okay, we never made it back, but the sliding parallel was more accurate as support and resistance in the breakdown in December anyway. So, you know, the implication, of course, is that we continue lower towards the lower parallel of the same structure. And again, we've got the parallel, the lower parallel of this entire, you know, thing that goes back off the 2011, 2014 highs, extends off of the low in 2009. Down here is a confluence, and it's basically, you know, after next week and after the week after that. So, you know, it's the next 2 weeks, really, that it intersects down, and look where 43.50 happens to be. 43.50 happens to be the exact measured level of the range here, the range expansion, right? And range expansion, all that is you take the distance in price between the low and the high of the recent move. Not much of a range, really. It's just kind of a rally and then an epic failure. But you take that and, you extend that and you get 143.50. So 143.50 looks like it's in store for the pound dollar at some point in the next 2 to 3 weeks. Now, on the daily chart, what you want to do here, this is red now. Okay, so remember this old channel line, which was pretty good resistance for a time? It was kind of support, I guess, on Monday, right here. But what you want to do with this is this actually becomes resistance again. So this line, where's that, about 149.90, okay? Which would make sense because what's that? Former lows there. So this is now resistance. All right. 149.90 is resistance for pound dollar, which is a good thing, I guess, if we're short pound yen. But 149.90 would be looking for resistance in the British pound against the U.S. dollar at this point. All right, what other yen crosses do we have? Oh, I talked about Kiwi yen last night. Again, we've got RB and Z here, right? We got RB and Z is at 4 o'clock, okay? And then Wheeler with his conference at 4:05. RB and Z is, Fernando, great question. Should we cancel order before RB and Z? Yes, I would cancel that order. I'll tweet it out. That's a good question. Let's go over that though. So you've got to be obviously aware of the event risk, but RB and Z is, and Wheeler in particular, for a central banker, they often throw the market curveballs. I mean, me, I'm not a fundamental guy. I like to keep it to support, resistance, breaks, median lines, blah, blah, blah. But, I would not be surprised to see this thing get jammed back up into resistance, okay? And obviously with RB and Z, you can have spreads widen out and all kinds of stuff happen. So I would say cancel the order as it is. The goal on the trade last night and the order was to get triggered before RB and Z so that you had something on the table in order to ride it lower if that's what it was going to do. It just didn't get triggered. So, while I'm still bearish Kiwi yen and bearish yen crosses in particular, except for really dollar yen, because I guess I'd say I'm bearish dollar yen, but I don't have a short set up dollar yen. I just, it's still hovering above support. Maybe Wheeler throws us a bone and you get a rip up back into this level, okay? And if we do, really the same level is probably resistance. I mean, 88.55, 65, right? So I like the trade still, Fernando and everyone else. I like the trade still. It's just, I'm not going to tell you to leave it on ahead of event risk. I mean, we took a hit with dollar CAD last week on that anyway with NFPs, but whatever. So Kiwi yen, RB and Z coming up. I would still be looking for resistance up here if it gets there. Pound yen, still kind of weak, just consolidating. Euro 105.55. The euro is, this trend is so insane. Obviously, I've been trading for 11 years. And I did trade through the financial crisis, but that was different. That was like that was a couple of months, right? was a burst from like the summer through the fall of 2008, in which things really went totally, wacky one-way trend. This has been going on now for, 10 months, right? So I've never seen anything like this. You could say that some of the really old-time guys may have seen, stuff like this back in the 70s with the euro. I mean, not the euro in particular back then, but I mean just the trend in general in FX and how strong it is, the trend. Holy moly, what just happened? Bonds just went through the roof. But the trend, as far as, the consistency of the trend and how extreme it's gotten, we actually have never seen anything like this on a lot of fronts. And, really, I'm not sure how much more point there is talking about it, but it's true. We just haven't. Okay. In any case, euro, not even, what's the point of getting levels? I mean, 105, 104.99 is a level. I think I wrote about that at some point last night, but 104.99 is a level. Whatever. Looking at the Aussie, let's look at Aussie and Kiwi dollar. We looked at Aussie and Kiwi yen. We've got, we had some just beautiful slope going on here with Aussie. The touch on here on this upper parallel. This level, which was the midpoint between the median line and the upper parallel, was very nice support. And this was NFP, right? All the way back here. This was support on Thursday. And then this was resistance on Friday at the upper parallel. So it was absolutely gorgeous, but again, it was right into NFPs and kind of, difficult to just throw a trade on right there, especially with spreads. But the same slope is something to watch, okay? So this is a new line here. This one, you can see it was support. It wasn't the most precise support here, but it was kind of resistance here last night. We didn't quite get to it. Or sorry, that was not last night. That was yesterday morning. In any case, with employment tonight, I'd be looking at, resistance, one, the median line, and, you could try to take a short against 76.32. But again, there's the whole problem of spreads blowing out and you getting stopped out for no reason. But two, you've got this level to watch, at some point tonight. And let's see, what time's employment? Probably 9:30. So, that could be up near 76.65 in Aussie. So these are your levels to watch for Aussie dollar. Obviously, on the downside, Aussie has a lot of downside left. This was the weekend charts that were posted. Here's the daily, okay? Aussie dollar breakdown levels. In this market, might as well go for the full breakdown level. So 73.38, and then lower parallels are actually lower than that for the Aussie dollar targets on the downside. You can see on the weekly. If this lower parallel is going to be reached, then we're talking down below, probably even below 70 at this point. Okay. Are there going to be supports along the way? I don't know. Doesn't seem to be, if there's going to be such a thing as dollar resistance, one would think that it would be fairly soon because it's gotten extremely newsworthy. But, trying to, at this point, guessing if there's, such a thing as resistance in the dollar hasn't worked out too well. So, I'll point out that you could get a bounce near 75 from this, okay? I'll point out that the median line will continue to be resistance, more than likely, if it's reached again, okay? But I don't know if that's going to get reached again. So trade setup-wise, for the Aussie, on trading a breakdown, there's two options. One is sell into the median line, two is sell into the sliding parallel, okay, with stops, above here, which would be above the week open, above 77.04. Those aren't my ideal setups, as far as the dollar is concerned. I'm personally, with sentiment so stretched at these levels, I prefer to stick with yen crosses right here, but I will just point out levels in the crosses, in Aussie dollar as well, because we do have news or event risk coming up. Kiwi, right? Unfortunately for us, we were shorting right here last Wednesday, and was stopped out before a giant decline, and have been personally kind of trigger shy on getting back in. But you've got the same slope here is going to be potential resistance, okay? Ideally, again, this red one is the one that I would look to target because it's been extremely precise. But then I did notice right before the webinar when I was going through the charts again, there is this one as well. You can see how the touch points there, and then all through here, all through, what was that, all through yesterday morning and last night in Asia as well. So with RB and Z later, I would pay attention to these levels, okay? There's that low. During RB and Z, this level is like 72.80, this line right here, And again, remember, it's kind of the same thing as it's kind of the same thing as Kiwi dollar, Kiwi yen, right? Kiwi yen, we talked about that. We talked about resistance for Kiwi yen, RB and Z, potentially up here, at 88.50 area. And so with Kiwi dollar, same thing, right? Any sort of initial pop, I'd be looking for resistance in the Kiwi dollar up at 72.80, okay? And if you get that, you should be able to trade on the other side of 73.15, so you get a really tight stop there. 72.80 short, 73.15 resistance. Again, it's not like trading futures. It spreads. You can get spreads on an FX blown out. So on any sort of news event, obviously. So it's placing orders here and then saying that you're going to put a stop up here. It's really kind of a difficult task, right, to undertake because you really don't know if your stop's safe or not, which is kind of a bummer, but it's just the way it is. Okay. Personally, I like the Kiwi yen trade, or Kiwi to the downside, better than Aussie to the downside, which is why I put the Kiwi yen trade in and not the Aussie yen trade, because Aussie Kiwi itself, Aussie Kiwi itself made a huge weekly reversal last week, right? Here's Aussie Kiwi. Okay, here's that weekly reversal. You can see it's trying, there's a weekly chart down here. Here's an hourly chart. You can see that it's been hovering above its median line, which is a bullish event. Okay, that's bullish. We're overcoming it. It was resistance. It was resistance. It was support, and it's been support, and it might be about to go like this, straight up. Okay. What we got? Oh, looky for us. We got a nice breakdown. Might be underway here. Appears to be underway in pound yen. So we might be home free for another 300 pips or so, which would be nice. For pound yen. During our webinar here, euro might actually trade to 105. Crazy. I want to look at let's look at some of the other markets too. So S&Ps, I still think we're heading, I don't think there's any real support in the S&Ps until, you know, down here, like 2000. Okay. And that actually would be probably temporary support, but you could get quite a bounce from there. Okay, at about 2000. You know, been advocating a short position in the S&Ps, and you know, I think I put out basically the same chart for the most part a couple weeks ago. It's towards the end of February, but we were like right here, and we were talking about the possibility of the S&P 500 futures topping at like 2120, right? Because of this line right here. And what happened was we traded at 2117 3/4. We actually never even got to 2120, and the market is pretty much fallen apart. And yeah, again, I don't think there's any real support for another 44 handles or so. You know, so you know, maybe that results in pound yen trading to 78.30, and then you get a bounce or something. But you know, bigger term doesn't make any sense. Bigger picture. Remember, this is the weekly for the S&P 500. Bigger picture, there might not be support until below the February low. Okay. Dale, he says, on pound yen, do you wait to see if support? Yes, personally, Dale, I do. You know, I'm not going to say that there's like a right answer, because there's really not. But yes, personally, I do wait. Okay. One, you know, the hour's not closed yet. There's a concept actually in median line analysis, or trading with median lines, I should say. It's called, I think it was this guy, Tim Morg, who he did a lot of stuff with trading with median line. He's a professional trader. I think he's still around. The guy traded for banks and stuff for like 30 years. But he, I think, was the one that came up with the concept that was called zoom and retest. Okay, and you know, it is what it sounds like. It means you zoom down through the median line, it's a breakout, and then you retest the median line, and then you continue lower. Okay, so that's kind of the way that I like to go about it for sure. Okay, and it doesn't just apply to median; it applies to any sliding parallels as well. A lot of times the median line isn't necessarily, it's a great reference point, the median line, because I mean it's pretty objective, especially if you get trading on the upper parallel as we have here in pound yen, right? I mean all these highs were up here, so. But the sliding parallels are typically the ones you want to trade on. They're usually with where the slope really is in the market, right? So it applies to all these, zoom and retest. This is a good example, I guess. Let's see. Well, we didn't actually get it there, so it wasn't a good example. But yeah, if you wanted to add to this, wait out, the hour, couple hours or whatever, and then see if you get a rip back into it. Okay. The Aussie yen, this was a zoom and retest right here, right? Zoom, retest. Okay. And now it's going for 91.60. So that was a good example of a zoom and retest on the Aussie yen. Would like to get one on Kiwi yen tonight or Kiwi dollar, right? I think that could be quite profitable. The great thing with these zoom and retest type of trades is that they're super high reward to risk because literally, one, you're going with the trend, but you're trading, into, the right where the trend would be, what am I saying? Right where the trend would no longer be, nearly as strong. And pound yens keep going. There we go. So yeah, so you're trading into the trend, but you're also trading with, a very defined level with, you know where you're wrong pretty quickly, right? And it might be an instance where you want to wait an hour or something on a stop. I mean, there are times when you can just go ripping through the whole thing, but, you'll spike above it and come back below, whatever. There's a lot of ways to do it. I mean, some people look to trade into it on an order. Some people might just put, wait for a spike bar or an hourly reversal bar or whatever. So it's really up to you. But yeah, it's a great concept. It's a great trade setup, really. Zoom and retest. Okay, so I'm going to get back to some of the other stuff, right? We talked about the S&Ps. This is the bond market. This cracks me up. This is great. So remember after we broke all those supports? Man. This goes to show you how the NFPs and everything else are such a sham. So this was NFPs, right? Right here. Okay. It took 3 days, but NFPs has been completely retraced. Okay, and we're inching back up towards the year open, and where if we're going lower, where we should find resistance. If we go back up through here, okay, if the bonds get back through this level, which was former support, and this level, which has been resistance, if we get through there, then I can't imagine this thing's not going to go absolutely screaming higher. Okay, but getting into some pretty serious resistance here in the bonds. Gold, man. Gold and silver have just been pummeled. Jeez. Silver's working on its 9th day in a row down. I looked back over 12, 13 years of data, and I've never seen 9 days down in a row, ever. It's never happened. Of course, with this latest dollar rally, there's a lot of things that never happened. Okay, gold's working on its 8th day in a row. That's pretty darn rare, too. That doesn't happen very often. Oops, what did I do? In any case, gold, feel kind of silly saying that there's possible support, but there is possible support here. Again, this not support to buy. Okay, I'm not saying that. But this is a level for a bounce. Okay. The bull market possibilities in gold were done, finished with after NFPs pretty much here. You know, where in bonds, at least we did have, you can see bonds that we at least had this, right? Gold, we don't have much. Let's see, it's a short-term chart. It's an hourly chart. So, you know, if gold's going to turn higher at all here, I mean, it like can't literally go like, it can't go like $2 lower. So something to watch for. You know, it's pretty telling the fact that gold can't get a bid when stocks go up or down, right? And here we have stocks getting hit again. So here we go. Here's the S&P chart. This is a 60-minute. This is like my trading chart that I work with intraday. You can see the slope. We've been following the slope. I posted this stuff last week. It's been absolutely beautiful, you know, as far as the S&Ps have been concerned. That was Monday. That was awesome. This one now, it could be resistance. Okay, could get resistance there. You know, other than that, like I said, on the daily, I don't think there's any support for the S&Ps until we get down towards this level, which is like 2,000. You know, and by support, I don't mean like 10 or 20 handle bounce. I mean like, you know, I mean like a big bounce, right? 30, 40 handle bounce. So I would keep an eye on that. You know, it'll be interesting to see how dollar yen plays out too. You know, if this thing does crack for real and we get down to 2,000 in the next 2 days or something, or this week, I'd be pretty shocked if dollar yen doesn't trade down to 120.50. You know, then again, dollar yen hasn't really been the risk off trade that it was in years past. You can see that when the markets get really bad, it does tend to go a little more risk off, risk on, or risk off, I should say. You know, like when everything's cratering, you know, like what happened yesterday, basically, right? Dollar yen traded off those highs. So, you know, it's a possibility, I guess, but definitely not what it once was. Now, the other yen cross is, you know, doing pretty well. Oh, goodness. Cable breaks 149. Okay. All right. All right. I'll take it. Take it. What else did I want to look at? I'm going to show you some other stuff too. So 143.50, only 600 and something more pips until we get to support. What did I want to look at? I forgot. Oh, the Nikkei. That's what I want to look at. So I talked about, that's not what I want to look at. This is the wrong chart. No. All right, here we go. So here's the Nikkei. I don't know if Nikkei's telegraphing a dollar yen breakdown, but it might. You can see that, see how the support, pretty darn nice, precise, here, here, here. It's a really good support, right? Now this structure, this downside structure really isn't, again, it's not like this is not a verified slope right now in the Nikkei. It is something to watch. And again, the median line could be very useful here. There are some very nice touches on it. It was support here, support here, support this morning. So when we get below there, you know, I think things really start to get hairy for the yen at that point, maybe even dollar yen. But what I want to highlight about this is the fact that those supports that were so precise throughout the last, you know, month, basically, was literally exact resistance this morning at 2 a.m. Okay, so that's a pretty bearish sign near term. You know, it's like a step in the right direction in order to be, you know, bearish on a market. Is, you know, step one, you break bullish slope. Step two, you retest bullish slope, but the market fails at it. Step three is you get some good bearish slope to work on. And I don't necessarily think we have that yet. We would have that if the Nikkei traded, like, you know, up into one of these lines here, or even up here, even up to 18.9, okay, and then failed, because at that point you would have multiple touches on a downward sloping line, and that's when you would want to take action in a market, right? So you go from observing to bam, you lay it on, okay? So, you know, that might be something to watch out for in the Nikkei and the yen in general, right? Something to follow, because, I mean, if we start to get a bearish slope response in the Nikkei, then these yen crosses might really fall apart, and at that point, might not even want to take a target. Might want to just let it go, right? What I mean, look at this. This is crazy. Euro yen. Look at that. All those median line failures, all of them, right? So, you know, there we have all those failures. And now, at this point, you know, you're breaking everything on the downside. This is the weekly chart. Maybe there is some sort of a level for a response. The measured level here is going to be pretty far. Measured target for this isn't until 123.60. Okay. So, yeah. Got potentially a ways to go on euro yen. Now, you know, this line here, okay, these areas, if there were to be some sort of a rebound, this is where you'd be looking for resistance again, okay, one of these lines. Pound yen. Hey, we already went over the pound yen. Yeah, you can see how dollar yen is just going all over the place. I mean, it just traded down to 32 and now it's at 50. I mean, it's like 20 pips. This is why you don't want to be short a market that hasn't necessarily broken any support yet. You know, I think it's bearish, but it hasn't broken any support yet, so it's just going to sit there. Once it breaks support, you might be on your way. Okay. Oh, here's an interesting one. Again, feels silly even mentioning such a thing, but we are getting up into the upper parallels of the U.S. dollar index. This is the Dow Jones FXCM one. This is not the ICE, right? This is the FXCM. So the levels on this thing, what we got? Got about 12,130 to 12,170. I mean, you know, got a little more room on the upside. But I'd be watching very closely up here to see how the dollar is going to respond, you know, with the euro trading at 105 basically. So okay, so those are the big major markets. Are there any any other any questions? You know, that I could answer for you guys. Stefan says, thanks for everything, my man. Later, yeah, sure. Okay, no problem, Stefan. Petru says, dollar CAD targets. Yeah, so dollar CAD just broke above its median line a couple hours ago. This level would actually be support now. So the dollar CAD targets, again, full targets in dollar CAD out of the triangle. Take the width here. There's two ways. There's actually two ways to measure targets. And Pedro, I see your question. I'll get to it in just a sec. Okay. And you too, Dale. I'll get to all these questions. Cover the dollar CAD. Okay, so dollar CAD. Two ways to do triangle targets. I've seen it done two ways, and I'd say there's one way for aggressive markets, which is obviously now, and two ways for, or one way for more quiet markets, which is not now. But the aggressive way would be to take the distance of the triangle at its widest point, okay, and then add that distance. And you could also add add the distance times 61.8. So it gets you two targets, 3070 and 3240. Okay? So those are some big targets, obviously. The other way to do it is to take wave B of the triangle, okay, which would be this one here, A, B, C, D, E. Take wave B and extend extend that from right here. Okay, and you get 61.8 gives you 129.47. So you take the 161.8 of wave B. Okay, you can also take the 261.8. Just so you take 261.8, which would be 32.90. So that gets you basically a target zone of 32.90, 32.40, 32.90. Okay, and again, your support for dollar CAD is now the median line, which would look to be in line basically with right here with 120. It's actually above that. Looks like it's up here. So 127.10. Wherever it is along this line, it's would be support, okay? So old resistance, new support. Okay, so right in there. Other questions we had here. Let's see, what would be Dale, what would be a stop for pound yen if it did retest? Sure, so I can show you how I would do it. Okay, so let's say we came back into here, 181.20 or whatever about there, 181, let's call it 181.20 or so, you know, would be your level, the resistance there. Yeah, you could get, you know, it's tough to say exactly. Dale, what, you know, the stop on this, to be quite honest, on the zoom and retest, so if it retest here, you want to see it turn over right away, okay? So if you were trading this, you would literally probably put a stop up above here, up above 181.60. So 181.20, 181.60 stop, okay? Of course, the problem with that is that, you know, you might end up getting stopped out of a trade before it has a chance to work. That's just based on that, you know, on that method alone, okay? You know, there's literally no leeway for the zoom and retest. It either is going to go do it and then work, or it's not going to work, okay? That would be a very short-term way to look at it. We're obviously short from like up here, and we're looking more, you know, for a bigger move. So I'm going to move the stop today. I'll put it in the new report. My stop will be up here now, okay? Because at this point, we've broken through so many levels that we shouldn't get back up here if this thing's for real. Philip says, do you think it's still trying? I mean, yeah, I'd say so. I mean, really, this is the break, you know. So with resistance for pound yen at this point, you know, 181, I'd put it 181.70 would be your best chance if you got back up to 181.70, because that was resistance, or sorry, support here, here, here. And it's also the week open. You see the weekly opening price of 181.67, little black line there. 181.67 is your week opening price. So that, Philip, gives you, you know, kind of a nice point of reference, right? An objective, you know, to look at, or objective level to look at as a level to enter the market. So, you know, it's really nice when you get these week opens, or, you know, month opens, or even year opens with a slope line, okay? Because the slope line's great itself, but it's even better when you have a point of reference like that. The big Pedro asked, the big resistance up in dollar yen. Yes, so the resistance in dollar yen, I'm not sure if you're referring to, like, we're at resistance now, basically, right? Because we're at resistance here from, again, we've got these, you know, we got the confluence, right, of this, okay, as well as the upper parallel here. So we have confluences from several upper parallels, okay. At the same time, we're sitting above support, right, from former resistance, right? That was resistance, that was resistance, that was resistance, that was support. Today's low is a few pips above it. So you know, in order to get bearish dollar yen itself, you really need to see this thing break lower here, and then, you know, retest it, fail, and then ideally look for some bearish slope to trade on. Oh, you're talking about that one. Yeah. Okay. So yeah, near 123. So this is this is a monthly chart, so it doesn't get much bigger than this. There's the 2007 high at 124.13. Okay. And then you can see these lines. Okay. This is 1990. This is 1998. This is 1995, 2005. You can see that we have those two meet. There's a confluence basically in April, so next month, and it's, you know, it's at 123.20. So that's where that comes from. You know, again, we don't really know if anything's going to happen there, but it's such a huge confluence of two really long-term trend lines. So, you know, it's worth knowing that it's there. You know, that if the market did trade up there and then do something, it might be worth, you know, taking a stand. But, you know, at this point, it's almost like a magnet, right? When I look at the short-term structure of that thing, of the dollar yen, I feel like it wants to drop and come maybe back into here, come back into 119.80 even, maybe even the year open, 1980, you know, 1990, and this support down here, which would also be a retest of this line, which is the line from December high and the February high, and it crossed through some highs here in late, you know, or early March, and that would give us an opportunity to maybe even get long dollar yen. Okay. So, you know, first thing though, that resistance, need to get down below here to get comfortable looking towards the 119.90 area. Okay. All right. So that's pretty much it. If there's anything else, I'd be happy to answer. If not, we will revisit next week. All right. Okay. Thank you all very much, and have a great rest of your week. Okay? All right. Thanks again.